Hey everyone, welcome back to Corporate Decoder, where we find the hidden stories in your favorite companies' filings to keep you ahead of the game. Today we are diving into Averin Capital Acquisition Corp, their report from the 18th of February 2026, and let me tell you there is a lot to unpack when a company goes public. So first things first, Averin Capital Acquisition Corp, or ACCIA as they are known, have officially entered the public markets. This is a pretty big deal for any company, and it means they have completed their initial public offering, or IPO. Think of an IPO as a company deciding to sell pieces of itself to the public for the very first time. This allows them to raise a lot of money to fund their future plans. Now, this report we are looking at is a Form 8K, which is like a public announcement for really important events that happen in a company. The big news here is the completion of their IPO on the 20th of February 2026. They floated a massive 25 million units. What are these units, you ask? Well, each unit is made up of one Class A ordinary share and a sixth of a redeemable warrant. This whole package was sold at $10 per unit. That means they raked in a whopping $250 million in gross proceeds. Imagine holding over 25 million of these little bundles of shares and warrants. That's a lot of pieces of a company. The ordinary shares are essentially the basic building blocks of ownership in the company. The par value of $0.0001 per share is super tiny, which is pretty standard for these kinds of offerings. Now, these warrants are pretty interesting. They give the holder the right to buy a Class A ordinary share at a set price of $11.50 in the future. Think of them like a coupon that lets you buy a stock for a fixed price later on. The underwriters, the banks that helped sell these shares, also have some extra power here. They have a 45-day option to buy even more units to cover any unexpected surge in demand. This is called an over-allotment option, and it is a way for the company to potentially raise even more money if the IPO is a big hit. Going public involves a lot of paperwork and agreements. They signed an underwriting agreement with Deutsche Bank Securities Incorporated. This is basically the contract outlining the terms of how the underwriters will sell the company's shares to the public. It's a crucial step in the IPO process. Then there is the warrant agreement. This specifies all the nitty-gritty details about those warrants we talked about, like how they can be exercised and what happens to them. Continental Stock Transfer and Trust Company is acting as the warrant agent. They're the record keepers and administrators for these warrants. And here is a super important one for companies like this, the Investment Management Trust Agreement. A huge chunk of the money raised in the IPO, like $250 million to be exact, plus some deferred underwriters' fees, has been placed into a US-based trust account. Continental Stock Transfer and Trust Company is acting as the trustee. This trust account is a temporary holding place for the IPO funds. The money stays there until Averin Capital Acquisition Corp can find and complete an initial business combination like acquiring another company. If they don't find a business to combine with within 24 months, they have to return that money to the shareholders. So it is a bit of a race against time to find a good investment. They also have a registration rights agreement. This basically gives certain shareholders the right to have their shares registered with the SEC down the road, making them easier to sell. Now, on top of the public offering, they also did something called a private placement. They sold 200,000 units for $10 each directly to their sponsor, which is Averin Capital Acquisition Sponsor LLC. This brought in another $2 million. These are essentially the same units as the public offering, but they are sold privately and don't involve any underwriting fees. This is also a common way for the founders and initial backers to invest alongside the public. There is also a letter agreement. This is pretty standard, and it outlines commitments and understandings between the company, its key people, and the sponsor. An administrative services agreement with the sponsor suggests the sponsor will be providing some operational support to the company, likely for a fee. This is common in the early stages. And then we get to the indemnity agreements. These are important for protecting the company's directors and top executives. The company agrees to cover their legal costs and liabilities if they get sued in connection with their roles. It's a way to ensure that talented people are willing to take on these high-stakes positions without worrying constantly about personal financial ruin. They also filed their amended and restated memorandum and articles of association. This is essentially the company's constitution. By amending it before the IPO, they likely made sure its rules and structure were aligned with the requirements of being a publicly traded company and its future business plans. Now let's talk about the people in charge. On the 19th of February, a new board of directors was appointed. Ulrich Schulze, Graham Bell, and Mary T. Zeller are now on the board. They've also been assigned to key committees. Mary T. Zeller and Ulrich Schulze on the audit committee with Graham Bell as its chair. Graham Bell and Ulrich Schulze on the compensation committee with Mary T. Zeller as its chair. These committees are super important for overseeing financial reporting, risk management, and executive pay. Their appointments signify the company is ready for public scrutiny. Finally, the report wraps up with press releases announcing the pricing and the closing of the IPO. These are public announcements to let everyone know that the deal is done. So what is the story here? Averin Capital Acquisition Corp has successfully completed its IPO, raising a substantial $250 million plus additional funds from the private placement. The money is held in a trust account awaiting a future business combination. This is a critical first step for any special purpose acquisition company, or SPAC as they are often called. The success of this IPO depends heavily on their ability to find a suitable company to acquire within the next 2 years and execute a profitable merger. The clock is ticking on that trust account money. The key risk here is the company failing to find a good acquisition target, which could lead to a liquidation and return of funds to investors. On the other hand, if they secure a strong business combination, they could see significant growth. It's a high-risk, high-reward scenario typical of SPACs. Alright, that is our breakdown of Averin Capital Acquisition Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.